Hello everyone, my name is DTGFX here. These lessons are for people that are intermediate. That means you should have already the basic knowledge of Forex, what it is, what stop loss, take profit and everything is, and what makes the market move. So if you're an intermediate, make sure you follow this page, make sure you follow this channel as well. I also put in my YouTube channel where I'll also be putting my videos, and also join my Telegram channel. This is for the intermediate guys. So today I'm going to introduce you to a concept which arose from the idea of support and resistance under the bracket of slanted trend lines. Now this is called channels, and in channels we're simply just connecting at least two slanted points or three slanted points, both from the support and resistance level in the slanting zones, and then trying to make sense out of it. So for this particular video, I want to keep it short. I am focusing on this zone right here, right? So I'm starting from this point, going to my right. Okay, so when I'm at this zone, I notice that I have to connect lines. So what do? I get my two there, and then I connect like this. Don't worry, I'm going to adjust them later on. And then I get another point, I pick these 2 points, right? So we have a channel focusing on these candles that are within this channel. Okay, now I do not want to focus more on what's happening inside the channel. There will be more videos of how we can also utilize movements inside the channel, but today we want to look at what happens when something breaks out of the channel, right? So you can see that GBP USD on the H1 time frame is coming from is pushing to the upside, right? So it's pushing to the upside and we have that push, and then it enters this channel which seemingly is not pushing to the upside but pushing to the downside. So if this is going to be a continuation trend, we expect it to push to the upside, right? So when we do impulse and correction, we'll understand why it is doing what it's doing. But for now, I want you to know that what we're waiting for is a breakout from this zone so that we enter with our buy. Remember, from what we've identified in this zone is that GBP USD in the H1 is pushing to the upside, right? So it has to continue to push to the upside if it's going to be a continuation. However, if that is not the case, it has to break to the downside. So irrespective of whatever the case is, we have to also focus on this particular zone we have marked out here. This zone is what will tell us what we need to do moving forward. So in this particular technique, what we'll do is we'll wait for a breakout, which we've noticed has happened at this zone, right? Now, you have two options as always. You can wait for a retest back at this zone. I'm going to extend a line back at that zone so that you guys can see that we would want to wait for a retest. So when market breaks out from this zone, it pushes to the upside. But when it pushes to the upside, sometimes, in most cases, it doesn't usually break out there and then. It has to come back and retest that zone to see how strong it is. If it is strong enough, the price will have to bounce back. So if it does come back to this point is where we would need chart patterns or any other thing that will scream a buy for us, right? It might be a double bottom, or you might see an inverted heads and shoulder at this point, and then you know that you are ready to buy, right? So that is the first option you have. The second option you have is immediately you see price breakout, you enter with your buy, and then you put your stop loss at this zone, the lowest point in the channel. Because sometimes market can break out, it can break out from this zone, but come back inside this zone, just not hitting your stop loss, and then finally breaking out, right? So the best is you wait for a retest. Now remember, at DTGFX, we want to minimize on your losses and make sure that the trades you're taking are most likely not going to make you losses by taking risks. However, if you want to go home or go big, you can take that route as well, where you say, I'll just enter immediately it breaks out, right? So we can see that price broke out and it went. Now, when it breaks out, what do you need to do? What you need to do is we're going to apply what we call the T90% rule. In the T90% rule, what you have to do is mark the highest point from your channel. So in this case, our highest point is this zone here where the channel starts from. Okay, so I have marked it. That is where you put your TP. All right, that is where you put your TP. So immediately you see that breakout, you enter with your buy, and then of course, as per guide, like we've identified, you enter with your buy at the breakout. So we have our breakout there. If we put our TP there, and of course, as I mentioned, our stop loss becomes somewhere here, right? You have a risk to reward ratio of 1:2. So meaning for whatever you risk, you're getting twice as the reward. And as you can see, price did actually hit our TP at that point. This is how you make your trades using the trend line. So this is DTG FX. Remember, there will be a full video explaining in depth of this concept on my YouTube channel, my Telegram for free signals, and anything else that you might need in regards to Forex.